The nights are getting colder, the chart's a little choppier, and December is peeking over the horizon with, well, two familiar guests, tax loss harvesting and a possible Santa Claus rally. Hold on to your seatbelts, folks. This is going to be a good one. October was an interesting month for sure, a mostly choppy market that offered plenty of buy the dip opportunities along the way. Overall, the month still managed to finish in the green. And now we're looking forward to November, which could end up becoming, well, one of the more interesting stretches of the year. Yes, you guessed it. We're talking, of course, about tax loss harvesting and hopefully that Santa Claus rally to follow after that. Tax loss harvesting season typically kicks off in mid to late November when institutional investors they start to trim down some of their lagging positions and fine-tune their portfolios ahead of year end. The activity usually peaks through early to mid-December as, well, those retail investors join in and selling pressure builds on, of course, those underperforming stocks. With the new T+1 settlement rule now in effect, the window, it's a little tighter, meaning the final day to sell for 2025 tax purposes will likely fall around December 30th. Once that wave of rebalancing passes, many of those same investors, they begin redeploying cash into the market, often setting the stage for the Santa Claus rally that tends to close out the year. For investors, this window can be a quiet opportunity wrapped up in a lot of noise. When tax loss selling hits, fundamentally strong companies can see temporary dips that have nothing to do with their long-term outlook. They're simply caught in the crossfire of institutional rebalancing. That's when patient investors can step in and start building positions at a discount, focusing on quality names they already wanted to own. The key is to separate weakness caused by emotion from weakness caused by fundamentals. One offers bargains, the other offers, warnings. By keeping a bit of cash ready and a watch list in hand, you can use this seasonal pullback to your advantage and, well, ride the potential Santa Claus rally bounce as markets stabilize into the new year. So, for the challenge, I'll be keeping my powder dry through most of November. With so many institutional adjustments still to come, there's no rush to jump in early. Instead, I'll be watching for those late month dips as tax loss activity begins to ramp up. That's when some of the best short-term bargains tend to appear. A sub to the channel is the best way to harvest some future content. Okay, let's get into the challenge portfolio. We will of course begin with the stocks that we have not added to in this cycle. Let's check out their returns. We've got Bank coming in at 8.61%. I do love that ETF for sure. Bird Construction, 48.16% total return. They look fantastic. They definitely look fantastic. And this is one that I do feel is going to benefit big time once we move deeper into this whole infrastructure rebuilding. Up next, we have CNQ. They're sitting pretty at 9.03%. It is nice to see a little bit of recovery in energy. CNR, wow, boy, still lagging. It's kind of funny. They're sitting at negative 1.35%, which is the exact same number they were at last time we did this. So they are still struggling for sure. We've got Diversified Royalty coming in with a nice look at 37.12%. Extendicare, also pretty strong, 31.90% total return. Farron Technology Group, they're sitting at 13.75%. We've got Fortis. Fortis has been looking so good this year, 34.73%. And our Harvest Bitcoin leaders, holy banana bread, 110.32%. This is an ETF that is absolutely just blowing away the competition for sure. Oh boy, it keeps getting higher. All right, let's take a look at Hammond Manufacturing coming in at 28.84%. I'm liking that. I'm liking that a lot. And one of my other favorites, London Gold, 85.74%. They're waiting. They're waiting for harvest for HBTE to stumble, but so far there's no sign of that. Up next, we got Pizza coming in at 24.57%. We have Q-Day at 9.80%. We have the Purpose Solana ETF, 39.62%. Now, they were much higher last month. Solana really didn't have a great month for sure. Up next, we have T Cash at 1.28%. And you never know, depending on how this tax loss harvesting goes. If there's some good dips, I might actually dip into T Cash in the next month or the month after. We also have XEG, our iShares Energy ETF, looking good at 11.68%. And speaking of iShares, we have their consumer staples XST at 5.87 and their utility version at 19.51%. That's not too shabby, not too shabby at all. Okay, so who did I buy this month? Let's take a look at those current buys. We will start off with, Air Canada. So Air Canada, I added 10 more shares, taking us up to 30. And they're actually sitting at a 2.16% total return. So they are in the green, believe it or not. So this is my latest Air Canada swing. So I will keep buying, providing they are under $19. And we're going to keep that going for a while. We'll keep that going for a while for sure. Unless we hit our target. And I'm thinking the target is, I'm thinking $21. At $21, we will sell. Or we'll at least put in a stop loss. See if we can ride it a little higher. All right, up next, I did add 10 more shares to good old Canoe EIT.UN, taking us up to 70 shares. They're sitting at a 26.56% total return. We also added 10 more to HHIC, going up to 30 shares, and they currently have a 5.44% total return. I will point out this return is pretty low. As they only started dropping dividends, it will improve for sure. Up next, we added 10 more shares of HHIS, going up to 65, and it's got a 33.10% total return. We added 10 more shares to my pipeline ETF, PPLN, taking us up to 35. They're struggling a little, 3.52% total return, but I'm okay with that. I also added, 25 shares to RMAX, taking us up to 75. Now, they are sitting at a 4.68% total return. I will point out, most of the RMAX buy was me rolling in the proceeds to closing out a position in Timber Creek Financial. So we did sell all 70 shares of Timber Creek Financial. Overall, we did end with a $66.11 profit. So that's still fine. Anytime you end something in the green, nothing wrong with that. All right, let's take a look and see what we added brand new to the challenge this time. I did add one new stock this month. ENCL picked up 15 shares at $18. And they're up right now 0.56%. I really do want to push my overall exposure to oil and energies. I do feel 2026 may see some recovery in this sector. So we'll see how that works out. Well, let's take a look at the overall portfolio. It's time. It was another strong green month, and the challenge, it definitely continued to thrive for sure. Looking at the numbers, we did add another $500, taking our investment up to $14,000. The community added another $56 for a total of $1,183 thus far. In addition, we also received $22 from affiliate links that was also added into the pot. A huge thank you to the community for sure. When all is said and done, that added up to a $15,839 investment for the challenge. We also did receive $127.12 in dividends for a total of $1,424.06 to date. When we add in the dividends and the growth, we get a portfolio value of $22,851.05. That does look pretty darn good, that's for sure. Crunching those numbers, the challenge total return comes in at 44.27%. I really thought it was going to drop more than that with the month we had, but I am definitely okay with it hanging out there on the higher side for sure. Okay, let's take a quick look at the portfolio's diversification with data pulled from the Blossom app. Speaking of Blossom, if you want to check in on the challenge, I do have it uploaded there, and there is a link below to sign up for the app. According to Blossom, our top 7 represented sectors are, we got industrials at top as usual, 25.4%, energy 16.5%, fixed income 12.5%, materials 11.3%, real estate 9.1%, utilities 9%, and financials at 5.8%. Whew, okay, it is time to look at the toad and the goat of the portfolio for the last month. Our top 5 worst stocks this month are, well, at number 5, we have PPLN coming in at 3.52% total return. Number 4, Air Canada, 2.16% total return. And like I said, I'm okay with Air Canada sucking at the moment because that means I can continue to build that swing. At number 3, we got Tcash TCSH coming in at a 1.28% total return. Number 2, our brand new ENCL coming in at 0.56% total return. And our toad of the month is once again our only stock that's in the red. It is CNR at negative 1.35% total return. We looked at the losers. Let's see who is topping the charts this month. Our top 5 best stocks are at number 5. Well, we got Diversified Royalty at 37.12% total return. Number 4, the Purpose Solana ETF at 39.62%. Number 3, Bird Construction sitting in there at 48.16%. Number 2, and it's been number 2 for a while, London Gold sitting at 85.74%. And our goat of the month. This is no shocker. It is, of course, the Harvest Bitcoin leaders, HBTE, with that crazy 110.32% total return. They're going to be hard to beat. So this top 5 is still very strong, and let's hope it stays that way for sure. Tune into the next update when we will do it all over again and see how the market is treating the challenge. I am excited for sure to see where we're going next. If you are interested in any of the stocks or ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on great ETFs for your TFSA. Thank you for watching, and I will see you in the next video.